All right. So your exam questions outlook. Is going to be that question 1 is going to be on consolidation, which of course is 20 marks. Question 2 is going to be on standards, 20 marks. Of course, we will be looking at some standards we deem critical of appearing. So IFRS 9, we have IFRS 8 or 24. We also have IFRS 15 and 16. Then when we come to the IAS standards, we will be looking at IAS 23, 19, and 33. These are our main focus areas for the standard questions. All right. Of course, the truth is that when you are doing consolidation, you are not going to have it easy because there will be standards appearing there. Per the questions we assume to happen, the likely standards you are supposed to be facing, apart from the non-ordinary standard, is your PPE. As for those ones, there's nothing you can do about it. It's a usual stuff. PPE, IFRS 2, that PPI is 16, IFRS 2, then IAS 2, inventory, IAS 36 to communicate impairment. Now, that is it. Your question 3. We are looking at question 3 also on standards. So the standards that are listed here, I've listed already, are the same standards we are going to look at. So you are going to have standards. These standards. Then question 3B is all about ethics. So ethics. This thing will be 10 marks per what I've shown you. Then the ethics 2 is 10 marks. 10 marks. It can be 8 or 7 with the rest going into, so they can make this thing A, B, and C. I mean, just to give a little marks to sustainability. So because sustainability and ethics are put together for the 15 marks, so it can be any ways. All right. So now you go in there to do these ones to also get 20 marks. All right. Then your question 4. Question 4 is going to be on specialized transactions. Now, the specialized transactions is business valuation, and reconstruction. Now, these two, it can be either of them, 15 marks. Our focus will be more on business valuation. That is where our focus will be more on, but we will solve 2 questions here. Importantly, 2 questions there. Depending on the time, I may add 1, but a minimum of 4 questions must come from here and 3 here. So when I say Tuesday, go through the videos. Go through the videos. Now, if you don't go through the videos, you will be in much problem. Yeah. So I will share the videos of that on your platform. It is up to you to discipline yourself, knowing that you really need this corporate reporting to do it. If you say you won't do it, then it means you are the one deciding for yourself what your expectations should be. So Wednesday, when we meet, it doesn't become something we need to hit on all the time. No. Because you had the Tuesday, find some time, just pay. And please, when I say watch something, I don't mean play it whilst you are busy somewhere. I mean, sit down, take a notebook, draft the point, make notes. Make sure you understand what is being said. Take your time. It's a full day thing you are doing. we said that this class is good for those who have leave. So, I mean, you have the leave. Take your time, dedicate some 4 hours for it, then do it within the 24 hours. Okay. Then, when you are done, we will come to our question. And please, you see that this thing is 15 marks. So there is the B part of it that we normally use as consult theory. And this time round, most of the time, it will be going to be about governance. So most of the time, that is how it is going to be. How the sharing percentage and everything, that the governance of it's like. So you have the extra 5 marks and making this one 20 marks. Then your question 5, as usual, is your ratios. The ratio is 15 marks now, which means that they shouldn't give you a lot to do that much, but there will be a little trick inside it. We will look at those tricks. Then you will also do the sustainability. And because it's a new introductory thing into your syllabus, it will come gradual. So don't really expect that much. All right, maximum 7 marks out of the whole sustainability thing. So you have 20 marks. So these are your syllabus. Now, where from my experience of teaching this course, if you start with consolidation, then it means that you are really versed in consolidation, i.e., when you did the level 2 consolidation, you balanced it. If you know you didn't balance the level 2 consolidation, or you yourself, you didn't even do level 2, then please don't start with consult. Don't hype yourself that much as if you balance, you do this. Don't try. Because the consult, by the time you finish reading the question a lot, it has taken a toll on you already. Even by the time you open the first page of your exam and you see the way the notes are, it takes a toll on you already. My advice is that you start with ratios. Gain confidence. And by the time we are done with ratios, at least, even though you didn't know how to do ratios, you have some confidence in approaching ratios now. All right. Then when you are done with your ratios, best thing is actually to come and do this one. Your confidence might be down now. Between this and this, you can choose any one to do. Your confidence may be down now, but when we start, at least you should get some confidence growing up. Then your last question will be the question 2 and the consult, because it's not like, if you can do this question 4, then it means you have some knowledge in your question 2 already. All right. So these are how we are going to approach it. So ladies and gentlemen, we start with ethics. Because there are some of you here have probably done some of the ethical things with, but I'm going to start as if we have not done anything before. We've not even met before. All right. So let's look at ethics. How do we deal with ethic questions? How do we deal with the ethic questions so that we can maximize the chance? Target 8 marks. Now, in the ethics, all that you need to know is your IFRS 5 code of ethics, the IFRS 5 code of ethics. Now, the IFRS 5 code of ethics, please, who can give me the IFRS 5 code of ethics? If you have any idea, you can help. Hello, class. The IFRS 5 code of ethics.
Yeah, hello.
Yes.
Objectivity.
Okay. Yes, I want you to mention them.
Professional behavior. Professional.
Okay.
Hello.
I'm listening, please.
I say objectivity.
Yes, continue as much as you can.
Integrity. Professional behavior. Confidentiality. Professional due care.
All right. So if you don't remember
And
these things, this is your acronym. This is your acronym. Of course, I like starting with integrity. So I for integrity. O objectivity. P, the first P for professional competence and due care. C for confidentiality. Then the last P for professional behavior. You see, this is one of the easiest things you should have because it is done in all the courses. PSA, it is there. Audit is there. Everywhere, it is there. Case study, it is there. Even tax, it is there. So it runs through all your courses. So it is not something you should easily forget. All right. Now, these things, what do they mean? The meaning is what you need to do your question. So if you take integrity means that you are honest and you are straightforward. It means we call something probity, high level of trust. So you can also say trustworthy. The idea here is that the professional accountant should disassociate himself from any information that is misleading. In essence, tell the truth. This is your safeguard. How you solve the problem is your safeguard. If you think the knowledge or the information they are going to give to their shareholders and the directors are not true, don't be part of it. Report it. Tell the truth by reporting it. All right. What does objectivity mean? Objectivity simply means that you are not biased. You are not biased. It means that you are not under any undue influence. So you are not unduly influenced. It also means that there is no form of conflict of interest. So this is the reason why it is bad or it is dangerous to use the knowledge of audit to try and answer these kind of questions. This is the reason why. Because if you go and say self-interest threat, it is in objectivity. If you go to say self-review threat, it is in objectivity. Those 5 threats that you learn in audit, they are called threats to objectivity. So if you use those ones, it means you have just spoken about one thing. So be careful. Be careful. It is only sometimes that the examiner wants to give some leeway that he allows to mark those kind of things, but don't put yourself into that condition. All right. Then we have professional competence. When we say professional competence, what we mean is that the person should have knowledge to obtain knowledge. Then that is what you are doing now. What you are doing now is to get knowledge. So you need to obtain knowledge. And that knowledge makes you a qualified accountant when you are done. But when you are done, you need to maintain that knowledge. ICA does this thing by organizing what we call the CPD, Continuous Professional Development. So you need to do that. So these 2 things are your exhibition of competence to have the experience. So obtain the knowledge. I always say that when I was doing ICA, revenue was governed by IFRS 18. Leases was IAS 17. If I say I'm a chartered accountant, now they are IFRS 15 and 16, and I don't learn the new things inside it, then it means that I'm using old knowledge to help people, which will put them in jeopardy. So that is it. So you have to upgrade yourself with the knowledge. Then the due care part. The due care part communicates diligence. It communicates diligence. What does diligence mean? It means that you do your work according to policy. According to policy. So if the policy says that read over your report before you submit it, just read over your report. Like the way I'm asking you that after today's class, since our next class is on Wednesday, I'll give you some videos to watch. It is a policy that we are giving to you to help you. Will you be diligent about it? That is you. So the diligence is kind of a discipline sort of thing. All right. We will look at how you translate it into solving a question. Because you are not going to explain this thing to the examiner. That's not your job. You are going to be given a case for which you apply this. Confidentiality. What does confidentiality mean? You know, confidentiality simply means that don't use the information you get on a work for a third party. You don't communicate that into a third party for your personal benefit. You don't do that. So it means that do not use information for your personal benefit. Your personal benefit. So in the exam, you realize that if you read a question and you see that somebody is going to give some information, that will be like you are revealing somebody's secret, and it is going to benefit you because you are revealing that secret, then it means there is a problem of confidentiality. That is that. So confidentiality, you need to find out, are you in a situation where you need to seek permission before you can communicate the information? Or you are in a situation where you are required to communicate it without getting permission? Because if somebody is doing something illegal, you don't need the person's permission before you report it. That is that. Professional behavior it has some tangent with all of them. So it means that here you have to be showing honesty. All right. You need to do your work in all honesty. What it means is that do not behave in any way that will bring disrepute to the institution or to the profession. Don't behave in a way that will make people say, so is this guy what we see, who we say is an accountant? You see, that statement means that if you are not honest, somebody can say that. If you have conflict of interest that compromises on your objectivity, somebody can say that. If you are not professionally sounded, it means somebody can say that. If you disclose information you were not supposed to, somebody can say that. So here it's about you not bringing shame to the profession. And all these things, if you do them, will do that. So a moment that you find out integrity is in a question, automatically professional behavior is in a question. If you find objectivity, automatically professional behavior is there. All these things that we want you to do, it is professional behavior. Here, we want you to apply professional skepticism. Skepticism. Professionally judge some things. Professional judgment. Meaning that don't bring disrepute to the institution or to the profession. Now, you saw that when I was doing this one, I gave you some form of safeguard. Now, if you are in a situation where you are biased, you are in a situation where you are undealing influence, in audit, we will call it intimidation threat. In a situation where there is conflict of interest is not confidentiality. Conflict of interest is whereby in a situation where you have to kind of review your own work. So all those things you learn, self-review, self this, self that, they are all conflict of interest. Self-interest, financially or emotionally, they are all conflict of interest. That is the communication you have here. Now, if you are in this situation, you don't know what to do. Safeguards are that you seek legal advice. Because if somebody is intimidating you, you have to seek legal advice without compromising on confidentiality. You may have to report it depending on the situation. Professional competence and due care. What is the meaning of this? Trying to close some application to improve performance. So you might have to report it, right? So you can report it to the people above if the internal problem is caused by somebody below the ladder of the organogram. You can report it to the person above, all right? Or you can report it externally. Okay, externally, that is to the regulators, ICAG, all right, those who are regulating the accounting profession. Okay, and if it is labor, somebody is, kind of taking advantage of you, you have to report it to Labor Commission and all those things. Professional competence and due care. What you need to do is that if you find yourself in such situation, you need to avail yourself to acquire the knowledge. Go for training. Due diligence, work according to the policy of the company. That is it. So you humble yourself to work according to the policy of the company. Those are your safeguards. So if you don't have the knowledge, be sincere and say you don't have the knowledge, and therefore you go for training. All right. Seek advice, professional advice, so that you know what to do. If in case you are misapplied a standard, you know what to do. All right. Good. So maintaining the knowledge requires you to always go for training. Always be going for training. Always be going for training. That is very, very important. All right. So that is that. Now, due diligence, like I said, is due care, like I said, is being diligent. So work according to policy. Work according to the policy. Learn the policy and work according to the policy. Confidentiality, find out, is it a situation where you need to get permission? If it's a situation where you need to get permission, then your safeguard is to seek permission. If you are a situation where you are required, then you report. But if you don't know what to do, also seek advice. It's very important. All right. As for this one, just do the opposite of the problem. Yes, apply professional skepticism, apply professional judgment. If you are torn between what to do, seek advice. Some people will say resign, but like I always say, resignation is the lender of last resort. If you don't have anything to do, if the thing is excessive and you still don't have, you think you can't solve the problem, then you write as part of your answers, resignation. But resignation doesn't preclude you from reporting when you are required to disclose confidentiality agreement. Like, you say you resigned. No, you still have to report it. All right. So these are the ethical issues. And if you have a question, kindly ask, because the next thing we are going to do is to apply this on 2 questions so that you will learn how to write the answer. Now, how do you write the answer in your exam when you have ethical questions to solve? Answering techniques. Your answering techniques is number 1, state the applicable code. The applicable code of ethics. If you read the question, state the applicable code of ethics. So, for example, you have read the question and you find out that this one is about integrity. You have seen issues of integrity or potential issues of integrity. Then you write integrity. That is it. Step 2, quote from the question. From the question. Not anywhere, not what you think, not what you've read about integrity, but from the question. The statement that supports your integrity, it's the integrity you have picked, the argument. So quote from the question, the statement that supports the code of ethics. So please, you are not going to explain to us what integrity is. You are going to quote from the question. What exactly did you see that makes you say that I have picked integrity as a problem? So that one goes like this. So this one is one line. Oh, you write it one line, like on, if this is, I mean, if this is your answer booklet, these are your lines. Please, this place is a place you don't give the examiner work to do. Write well, but you have 15 minutes to solve this ethic question. No more than 15 minutes. You have 15 minutes. So like I'm saying, if you have seen integrity, so you say one, integrity. That is it. Then you come here. So there is ethical threat, or there is an ethical issue of integrity, because then you pick the particular line in the question that makes you think there is an issue of integrity. Then you conclude. You conclude by saying this will affect the independency of the accountant, or so basically that is that, the independency of the accountant, or whoever, CFO or whoever the question is for. Then you give your safeguard if applicable, because not all questions may ask you to give a safeguard, but you do that if applicable. So ladies and gentlemen, are we good?
Yeah.
Are we good?
Yes, sir. Yes,
All
sir.
right. So we are now coming to apply it on the two set of questions that we expect you may have in your exam. Now, those two questions are because of sustainability and technology, IT, where ICA is heading to now. All right. So let's go into the questions. And please, if you don't have the document of the question, kindly let me know. If you don't have it, I think somebody like Henry, you may not have it, right? Or you have, do you have the questions?
Yeah, I also don't have it.
I saw some intervention questions. I don't know if that
Yeah, that is it. Please, who said he also doesn't have it?
Mate here.
I sent it
Is
to
it,
people individually. You didn't get
you
yours.
sent it to people? Okay, then I have to check out of the groups.
It's not
Let me
group,
check.
like individually.
Okay, I'll check and then revert.
Are you not Mate Mensa or something?
Yes, I am. You go ahead. I'll check and
I gave
revert.
it to you. You have it.
Down, no, me never. Space ni down, honor.
Who is that? All right. So let's practice now.
I'll send it. I have it. So
Okay. So we're going to read the question, then we will apply the solutions, what we have learned. I will suggest that it will come from you, all right? The solutions will come from you rather than me, because I've shown you how you go about it. And so you should be willing to apply. The more you are able to apply this, then you are able to have the exam condition to also do it. Please, this thing we have done now, is it difficult? Is it really something that you see as a difficulty? If you do, let me know where to break things down for you, because you may not have the opportunity again. All right. So let's go on. So we have a question in front of us, which is that Bismarck Company plans to implement a blockchain technology to store all of its data relating to its mines, trading, and to certify ethical sourcing of all raw materials. The chief accountant, Ms. Pleasant, is currently developing a blockchain technology that will be filed for patent. Ms. Pleasant has only recently taken up the post and has discovered that work done at a previous employer, Gibson, is relevant to this project. If Ms. Pleasant discloses this information, it will compromise a patent process at Gibson, but will consolidate her position as a chief accountant in Bismarck Company. When she left the employment of Gibson, she signed a confidentiality agreement, but the clauses were not clear or specific about what information what information could be shared and with whom. Now, when we go on to read this thing, it says that Ms. Pleasant has significant knowledge of blockchain technology, but the finance director, Mr. Fricklin, has limited knowledge of it and the new business model that Bismarck Company is trying to develop. And he goes on to say that Mr. Fricklin has told her that there is no need to spend a significant amount of time creating a technology to ethically sourced material. Ms. Pleasant is worried about Mr. Fricklin's lack of technical legal knowledge, and as she feels that it will affect the development of the technology. In addition, some of the data concerning ethically sourced material has gone missing, and she thinks that Mr. Fricklin has erased the data to try and sabotage the project. Mr. Fricklin has told the board of directors that he has an in-depth knowledge of the technology. Discuss the ethical issues raised by the implementation of the blockchain for both the chief accountant and the finance director, including appropriate actions which should be considered to resolve the issue. All right. So now, you should tell me, what issues do you see? And what line in the question would you pick to support that? And how do you think you can deal with the safeguard? Yes, anyone willing?
So can I speak?
Oh, you can.
So the first one has to do with the issue of confidentiality.
Okay.
In the sense that when you read the line from line, I think 1, 2, 3, 4, 5, from the line 5, it says if Ms. Pleasant discloses this information, it will compromise a patent process at Gibson Co., but will consolidate position as the chief accountant. That means that now she's in a situation where disclosing some information that she's not supposed to disclose will give her some advantage, which will breach her confidentiality, more or less like her confidential duty of confidentiality to her past employer.
Yeah. It is very good you have been able to spot that. But there is a line that also talks about this part that says that when she left, she signed a confidentiality agreement. But the confidentiality agreement didn't tell her who she can report to, who she can release the information to, or when and what information. So you see, that is true. Your answer is correct. However, you need to add the fact that that is why it is ethics. You know, for ethics is not legality. We need to separate the words. By legal position, she assigned a confidentiality agreement. However, even in the legal position, it is not specific. So there is ambiguity. But from ethical perspective, ethics is not legal. Yes. Those of you who have done fundamentals of accounting, there's something called rule-based accounting and principle-based accounting. We do principle-based accounting, which means that we expect you to ethically do some things. It is not lawful that you have to, but it is ethically sound that you have to. For example, let me give you, when COVID came, there was issue of nose mask. You see, there was no law that said everybody should put on nose mask. It was an advice from the health people. But they realized that people are not putting on the nose mask because it is not by force. So they gave an executive instrument that said everybody must put on nose mask, to a point that if you now don't put on nose masks, we can arrest you. So there is a legal aspect of things. There is ethical aspect of things. So they put on the nose mask before the executive legislation or instrument is what we call ethics. Because you should know that if you don't put on the nose mask, you can affect somebody. So we expect you to do that. So, like, even though there is a confidentiality agreement she has signed, we still expect her to ethically have that position of not releasing the information just because it will solidify his position and rather compromise on what somebody is doing. So do unto others as you want others to do unto you. It's as simple as that. So Henry, that's so correct. All right. But I just have to clarify this. So that is very good. And I like the way you also answered it. Oh, confidentiality due to the fact that that is the second line I was asking everybody to do. Then you quoted from the question. This you do because if you are marking these questions, what you want to see is that the student has gotten the filler. But if the students start beating around the bush, because you don't have time to read everybody's statement from top to down, from top to down, from top to down, you will mark the person correct, but if the thing is 5 marks, you give him like 3. But immediately you see that the student has gotten the filler, then you stop reading, then you mark everything. That is how it is. And that is from such experiences, the reason why I'm asking you to show the examiner the reason why you have paid confidentiality is because of a statement you have seen in the question. So you are not now going to tell us confidentiality is when somebody uses this thing for his personal interest. You have not said anything. No. You can only do that if you feel you have time. So that you can say that confidentiality is when somebody is using information he has gotten for a third party, from somebody for a third party for his personal interest. And therefore, in this question, Miss Pleasant, if he uses blah, 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 she's going to use it for a personal interest and all those things. If you have time and you can do all these things within the 15 minutes that we are talking about, hallelujah. But if you know you don't have that time, go straight to the point. That is it. You don't lose marks for going straight to the point. And you don't gain more marks for adding those things. No. No. All right. So that is that. Okay. Apart from confidentiality, any other thing?
Sir,
Sir, can I come in?
Okay, Mr. Mensah.
Okay, so I see two issues here. Integrity and professional behavior.
So let's take it one by one.
So integrity,
Mhm.
being honest and straightforward. Pleasant has a prior knowledge which she acquired from her previous employers. That knowledge, when she discloses in her current to her current employers, will aid her will aid her in consolidating herself as the chief finance officer. But then it will compromise the previous organization with regards to the patent for which they are holding. If she is not honest, she would disclose that information and then compromise the previous employers. That's what I see when it comes to integrity.
I know what is going through the minds of some of your students. So anybody to have something to say about that? What he said? Is there anything somebody would want to say about that? What he just said?
Sir, please, sir.
So let me know.
I think
Okay.
what he's saying is about the confidentiality, not the integrity.
Okay, Mr. Eric.
Yeah, I wanted to come in with the integrity as aspect.
Okay. So what do you see?
Okay. I think that if you read the passage, let me see, where is it? The passage talks about some data being erased, and then Miss Pleasant thinks that Mr. Franklin was behind it. And based on that, I think that he is trying to conceal an information from he's not trying to be honest. Let me put it in that way. He's not trying to be honest and straightforward.
Okay. So from Mr. Mate, yours is not really about integrity. But seriously, there is a line in the question that talks about the man not being honest. What Mr. Eric has said is true, but there's a particular line in the question that is so clear that will make the thing easy for you.
Sir.
Enoch.
Sir. Okay.
That's the where he said that I'm sorry,
You are thinking about it.
I think someone
Henry.
The last.
Sir.
Has told the board of directors that he has an in-depth knowledge of the technology.
Exactly. That is it. That one is so obvious, telling you that the man is not honest. He says that Mr. Franklin has told the board of directors that he has in-depth knowledge of the technology. But when we were reading the story, we realized that Mr. Franklin, Ms. Pleasant has significant knowledge in the blockchain, but the finance director, Mr. Franklin, has limited knowledge in the new business model that they are trying to develop. So him telling the board that he has an in-depth is in-depth. I don't know how I can explain in-depth. In-depth is in-depth. So that is one. Again, what Mr. Eric also talked about, that some data has been erased, and it looks as if Mr. Franklin is behind it. And that one too is not honesty. But the perfect one to use to end the story is the fact that he is telling them that he has in-depth knowledge, but he doesn't really have in-depth knowledge. It's not straightforward. So basically, that is that. So what Mr. Mate, you explained, that is exactly that answers the confidentiality. Because you are using the thing to solidify your position. And like I said, the second thing you see in this thing is professional behavior. Yeah. So basically, that is that. Okay. Yes, what else do you see apart from the integrity?
Sir, can you also talk about objectivity?
From which perspective? Of course, objectivity is part of the answers, but from which perspective?
So, in the sense that now Miss Pleasant is faced with a situation of trying to do something that will, consolidate her position as the chief accountant. In this sense, there is some element of self-interest here, which will cause her to be biased in whatever thing that she's doing.
So you have seen bias, it's true. And probably that is what Mr. Mate wanted to also say. There is also a conflict of interest in there. But there is another thing in the question that also talks about objectivity, like an undue influence. Have you seen that? Do you see that? Somebody trying to influence somebody. Do you see that in the question also? Yes, Enoch.
Yeah, so I think Mr. Franklin trying to influence or unduly influence Miss Pleasant at the part that what's the name? He deleted some of the information.
That is one. Number two, he told her that there is no need to spend significant amount of time in creating the technology to be ethically, this part, creating a technology
To
to
be an
ethically source
ethically sourced material.
That thing is something that he is pushing on the woman, and that is it. Undue. So you can see all the three things that explains objectivity in that, and you can explain all those places for your marks. All right. So that is that. We are left with two. Please, in a typical question, you should see maximum of 4. 4. In a typical question, you normally don't see all the 5 in the question. So you see the 4. So if you write 4, you are cool. But please, all these things you are saying, I'm going to come back and ask you your safeguard too. Yeah. I'm going to come back and ask you your safeguard. All right. Yes. What else do you see in the question? Yes, Enoch.
So there is lack of professional competence on the part of Mr. Franklin, because he seemed in the paragraph, I think that's the second paragraph, it says that Mr. Franklin has limited knowledge of the blockchain
Exactly.
technology or the new business model that
Exactly.
they seek to do.
So he's lacking competence in that. All right. And ladies and gentlemen, the fact that you have seen all these things, if you see even one professional behavior, is automatic. That one is automatic. So you just have to coin your answer to the fact that he's not honest, he's not, he's at the verge of being biased and all those things will compromise a behavior which is against the ethical concept of IFAC. But the confidentiality problem, what do you think he should do? The integrity problem, what do you think he should do? You can decide to bulk the safeguard as one, not necessarily writing confidentiality after that, then you add the safeguard. But after you have dealt with all these things, then you write safeguard, then you lift the safeguard that you think you should. All right. Use.
Oh, okay.
So let's not in any order, you can mention safeguards. All right. Not in any order, you can mention the safeguards. Yes.
So, with respect to the confidentiality, Ms. Pleasant is not supposed to disclose the information since it will compromise the patent process at Gypsum Co. And even if she may feel that she can do it, she has to seek permission from her past employer in order to do that.
Thank you. Or seek a legal advice to clarify that part of the confidentiality agreement to know whether she can use the information or not. Did you understand?
Yes, sir. So, but in this situation, when we were discussing the issue of confidentiality, you talked about the ethical stance of it. If she seeks for legal advice and her lawyer maybe advises her that, oh, since it's not clear, you can go on. But here, the question stated clearly that it will compromise a patent process at Gypsum. So stating the style of the legal advice.
No, the legal advice is a generic thing.
Okay.
It's a generic thing. All right. But particularly to this question, you can still seek the legal advice anyway. You can even come to ICA that this is your situation and you want to know what to do ethically. ICA is not a legal institution. It's an ethical institution. Academically, ethically institution. So you can come to ICA and say, oh, this is the situation you are faced with. Member services, please help me. What should I do? It will compromise. But of course, anytime you leave an office to go and join another company, especially a competitor, even you going to work will compromise the thing that you were doing in your former employer's office. So you just have to see, because like they said, the thing is not specific. It is not clear. So you still need to see clarity. And if by ethically you feel like, oh, you have the chance to do it, then you can do it. Let it compromise. Yes, that is it. But your job is not to go to that tangent. Just state it as part of your answer. All right. So just that. All right. So that will be it. There's what else? Enoch, I see another hand up. So Mr. Chumesi. Okay.
Okay. So, sir, Mr. Franklin, in order to obtain knowledge, can seek further training on the business model or the blockchain technology,
Yeah.
and or also resort to a peer review with Miss
Yeah.
Franklin.
That which he doesn't really want to do. Humble yourself and go to the lady. Let her teach you something. Yes, Mr. Chumesi.
All right, so I also think there should be policies and procedure in this smooth company which will give Mrs. Pleasant the power to report such the ethical issues Mr. Franklin is having to the board or the authorities.
It's true. So internal reporting, that's fine. Yes, any other? I think you are exhausting them. Nobody is saying that the woman should resign because she is being influenced. You see, it's far-fetched, right? So that's why I don't advise that you use the resign.
Yeah. So I think the resign immediate when it comes to you exhausting all the
Exactly.
alternatives, it becomes a last resort.
Exactly. Yeah. So but you can write it as part of your answer, a last answer, just to add up to your answers so that at least you don't lose any mark in there. So after
Oh,
exhausting all the things, if the thing still persists, you just resign. All right. So that is that.
okay.
Okay. So ladies and gentlemen, that will be good. It's a good progress. So we go to the next question, and you are the one going to also do that same question. Now, this is what I normally do when it comes to this second question. I'll give you 5 minutes. You have the question. You are reading it. Jot down your answer. All right. Then you come up with the answers. Everybody, and I expect those who have not talked so far, like Mr. Abanga, Ijakua, like Asmau, Doris, have not spoken. I've not heard from Da Costa, and the Rich. Yes, I expect you to also come up with something. Okay. So you have 5 minutes to work it. Yes. Okay. So what do you see? What are the issues?
So what I see first is threat to objectivity.
So objectivity.
Yes.
Uh-huh.
So when you read from the second line, it says that the directors are concerned that the compliance with the IFRS standard could have a significant implications for their products, which is implying that in the exercise of the powers and authorities given to them, they will be they are forced to be biased to themselves, to their benefits, rather than doing what is supposed to be done.
All right. Andy Rich.
Okay, so I also want to talk about a little about objectivity. There is an issue of being biased and undue influence in the last paragraph. It says that the second line says that the directors believe that the proposed treatment is justified as it will help Hudson maintain its debt covenant obligation and will therefore be in the best interest of the shareholder. So because of that, they are being influenced that
Thank you.
for if it turn out the way they want, it is going to
Why you ended it or the line cut you? So. Andy Rich. I think we've lost him. But his point is made. It's very clear. Everybody can see that.
Also,
It
there
is
is an
correct.
influence with objectivity.
Yeah.
Mr. Enoch.
Yes, sir, there is. I think when you continue highlighting, that's the next sentence or statement that confirms the undue influence
All right.
being under duress by the account.
Yeah. So the objectivity has a lot to say. Chumesi, your hand is up.
Yes, sir. So I wanted to talk about the professional competence and then the DUK.
Okay.
The principle requires the accountants to maintain the professional knowledge and maintain it. But here is the case, the directors know that when they comply with the IFRS standards, it will have similar implications for their bonuses and debt covenant. So they are telling the accountant to do the otherwise.
But that is that professional competence and UK. Telling somebody to do the otherwise.
Yeah.
Sir, that's intimidation threats.
That's what. Please let the
Intimidation. They are threatening the accountant.
I said that we don't use those words in this class. This is not audit class. If you have been listening. So you have to tell us where it belongs.
I'm using my phone. I'm driving, so I just okay then.
All right. Even though it is intimidation
Sir,
or something, it is under something. We don't bring audit into corporate reporting here now. All right. Yes. Even though there may be intimidation, intimidation is under something here. Okay.
I think it is undue influence.
Exactly, and they've already mentioned those things. So you saying that is just saying it won't give you any marks yet.
Yeah.
So apart
Sir,
from
I've seen
integrity. Integrity, okay. From
yes,
where?
integrity from the fact that the directors are aware that the proposed treatment does not conform with the required IFRS standards.
Exactly. So that is lying, Abi.
Yes, sir.
Yeah. But there is still professional competence in UK. It's just the way he is explaining it. That is my point.
Yeah.
I want to pick
on the last page,
can we take it one by one? I would prefer a hand raising so that I can call you one by one. Other than that, this one will talk, this one will talk, and it will create confusion. Okay. I have still two hands up. I don't know if you still want to talk. Enoch and Andy Rich.
Yes, sir.
Okay.
So, sir, there is still, I think we can also talk of threat of confidentiality because here the directors are trying to use the information for their personal
Which
benefit.
information? Whose information?
Sorry, they are trying to mislead their
And misleading is
of
not confidentiality.
Oh, okay.
So you have to understand what those confidentiality is different. You had a knowledge for working with somebody. You are going to. I mean, that is the situation of confidentiality.
So, but can't it be that they have the knowledge with the IFRS standards and
that they didn't acquire it from any company? Of course, everybody is supposed to have the knowledge. He's not using it in a way that it will affect anybody. IFRS knowledge is what everybody is supposed to know.
Okay.
Hello, sir.
Yes, please.
I think this has to talk on the professional competence in the UK. You see, they made a statement that they do not wish to provide for any other enhancements until employment is finally terminated. And the argument is that an obligation would only arise once the staff were made redundant, and that is not true. So
exactly.
It means,
go ahead.
Yeah,
see,
so it means that they lack the competence and the diligence to do the work.
Let me add something about professional competence. Professional competence is also most of the time, and that is what it is, and that is where your exams is even gearing towards. The application of a standard. Application of a standard. If you apply a standard wrongly, just because you are applying the standard wrongly means that you lack professional competence. Now, so sometimes it's an easy way of understanding how we solve ethical questions. So my friend and I came up with a clue. So you start from the standard in the question. Then let's say they misapply the standard. That is professional competence and due care. Did they misapply the standard because they were forced to do so, or nobody forced them? If they were forced to misapply the standard, that one is also objectivity. If they were not forced to misapply the standard, but they themselves misapply the standard, then it means that what is going to happen is that there is also professional behavior. And professional competence and due care, which means that they lack the knowledge. So that is how it goes, all right? So even that one alone can give you three things. Misapplication of a standard. Yeah. So that is that. And students will sometimes ask, so say, if should I mention the standard they are misapplying? Please, we all know that you are struggling with the standards already. What standard is this one?
IS 19, employee benefits.
Yes, exactly. So according to our employee benefits, how should it be done? And since they are not doing it like that, then it means that there is there is a lack of competence. So that is it. Yes, Doris, your hand is up. After Doris, I have Mr. Marty.
Hello, sir.
Yes.
Yes, sir.
I wanted to finish on the last note there.
Okay, no problem. Finish so that Doris can come in.
So it says that on the final termination, the directors intend to include the remaining basic enhancement and the additional pension enhancement within the remeasurement component. And this also says that it is wrong, and it has to do with professional behavior, just as you just explained, both with the competence and the behavior.
And
also.
the behavior, yeah. Yeah, that's very, very true. You see, you are able to boldly say these things because you know IAS 19. That is it. All right, Doris, you can go ahead. Yes, Doris. Okay, I think Doris is having issues. Mr. Mensah.
You said you gave us three things to do.
Okay, Doris.
We should state the ethical issue. We should quote from the the passage.
Yeah.
And then we should conclude. The conclusion, I didn't get that piece. I didn't get.
Oh, the conclusion is just to say that it is
conclude with the
compromising on they are compromising on the independence. Accountant is meant to be independent. Or they are compromising on their objectivity.
Yes.
Compromising on their integrity. So you must say that. All right. Then you give your safeguard. So that is what we meant by concluded. Okay. That one will mean that Mr. Mate, you can talk now.
Okay. Let me look at the objectivity and professional behavior, and after that, I'll also ask a question.
All right.
The issue of the directors indicating that they may have to replace the accountant if he does not support their approach. I think he places some kind of pressure on the accountant to act
exactly
in the director's interest rather than the IFRS standards. And that will compromise his professional objectivity.
It is.
So yeah, so that is in terms of that. I think that will in terms of objectivity, that's what is going to compromise it.
Yeah.
And then my question, in the ethical question, you have a lot of issues with accountants and directors, and that directors also violating ethical issues. In answering, do you ignore the directors with regards to, because they are not bound by the professional ethics of the accountant? Do you ignore what the directors are doing and just concentrate on the accountants?
So even with this question, if you read it well, it says that your answer should also consider the implication of the accounting for the accountant arising from the director's behavior. So you can't ignore what the directors are doing, the influence of what the directors are doing on the accountant. It goes together. Yeah.
But the directors, are they bound by ethics?
Everybody is bound by ethics.
Accountants' ethics.
No, not necessarily the IFRS code of ethics, but everybody is bound by ethics. But you see, the directors work with the accountants. There is no way they can be isolated from the situation. So whatever they do affect the accountants. If the directors cough, it is coming to your accountant. They are the one that can. You see, the accountant on its own can never be unduly influenced. It's not possible. The influence must come from somewhere. So that is where whoever is there, whether a director or whoever, it involves him automatically. But you can't say that the director is showing issue of integrity. Like there is an issue of integrity about the director. Now, you can say that whatever the director is doing is going to cause an issue of integrity for the accountant if he yields to that. So you can't see the director as a direct answering technique, but it comes from the director into the accountant. I don't know if you are getting my point.
I get it. So instead of using the director, you can use the behavior of the director and how it affects the accountant.
Exactly.
Okay. All right.
Okay. Andy Rich, your hand is up again.
I wanted to talk about the question my friend just tried. So I was saying that is why it is important that you being the accountant, even if the director is not aware or don't have any knowledge, that is why it is your duty to make sure that this is not what the standards say, this is not what the principles say. So it is your duty to let the director know that per the principle, it has to be done this way. So I can't buy what you are saying.
Exactly.
But if you allow the director, when the people come to you,
Rich, why your line has dropped again? Oh, we've lost Rich. So I don't know if you've heard of this term before, earnings management. Earnings management. When people try to corner how to get more profit so that bonus will be high, all right, or sometimes to how to lower profit because they want to kind of reduce the earnings. It is done by directors, but who does it in the books? The idea is always from the directors, but who does it in the books? It is the accountant.
The accountant.
Exactly. So if I want you to do something, you should tell me that, no, we don't do it like that. But if you allow yourself to go through that line, then the ethics that's where the ethics gets you. All right. So at the end of the day, it's a two-party street. Okay, but I've gotten three. There is automatic one, which is professional behavior, right? So that is that. So guys, thank you very much. This one means that if you face ethical question, given whatever situation it is, if it is 10 marks, I can be assured within me that we can get some people having the minimum people can get is 7. All right, that is that. Please, the safeguards, you can generalize the safeguards, not specifically to each and every individual one. So the same safeguards that you have been given. If there is influence and you say the accountant should be firm, and in other situations too, he can ask for legal advice, because you see, this one, he's threatened, his job is threatened. His job is threatened. And this is where, when it becomes excessive that they want you to do, you can say you are resigning. All right. Like Andy said, the professional competence aspect, the accountant is supposed to educate the directors that this is not how it is done according to the standard. So you have to educate them. If you educate them, they still don't want to do, and they persist, that is where you can resign. The integrity aspect, you have to be honest. That is all. You have to be honest. Or this thing they are doing, you have to disassociate yourself from this information that will mislead people. I hope you are getting it. So by the time you finish, you have written like 5 safeguards, even for 4 things that you spotted. Are we okay with that? Please, are we okay with that?
Yes, sir.
All right. So, ladies and gentlemen, this is it. Those of you who bought my corporate reporting book, you realize that I have given you about 32 questions on ethics. Check. So if from the scratch you have been practicing, this is a nice opportunity. If you want to pick additional ones and do, this is it. All right. Okay. And I think for those of you who really even don't have the book, you are equipped enough in how you answer it. Please, before I leave this thing down, I've told you, how many minutes are you supposed to spend on this? How many minutes, please?
15. No,
15.
no more.
So please, don't do more than that. Write fast. Communicate your idea. I don't think when you know what you are picked to write, it should even take you 15 minutes in book. If you really have spotted what you want to write, it shouldn't take you 15 minutes. And you will see, because this thing is a place where students is expressing opinion and don't really know the answering technique to go by, they will write stories. By the time you finish writing one objectivity, they've written like half page. That alone is like 5 minutes. So they take 5 minutes to write this, 5 minutes to write this, 5 minutes to write this, 5 minutes to write this. That is like 20 minutes. Please write fast, communicate your idea, be on point, and leave it there. All right. So basically, that is that. Any question? Any question on ethics? Any question? And I hope your confidence is a little geared up to handle this kind of situation. Yes, Da Costa.
Hello, sir.
Yes, please.
Hello.
I'm
yes,
listening.
Sir. Yeah. In when there is for you to provide solutions to the problems identified, what should you go? Do you do it after stating the case, supporting it with the ethical issue? I mean, then you do provide a solution there, or you leave a space, another paragraph, then you go and do. How do you handle that?
You say this can, I mean, okay, so if I'm getting your question clear, you want to know how you do it, like your lines, when you have the lines.
Yes. Yes.
So
yes, sir.
So after you have written everything up to here, safeguard or possible solutions. I really like the possible solutions than the safeguard. So possible solutions, then you write. Or you can write all the issues like the way we have done, all the 4. Without the possible solution, then you leave 1 line space, then you write possible solution, then you list all your possible solutions. One line, one line, one line. Don't write plenty.
No.
The accountant should. The accountant should. That's all. All right. That's all.
Okay,
I
sir.
hope it's clear.
Yeah. What I was struggling to pick up was the how to link it. The question
You don't
you thought,
necessarily
I
have
don't
to
know whether you
link
can
it
explain it
to,
more.
like I'm saying, you don't have to necessarily
So you
link
don't
it
have to
to
necessarily link
what you have written. It's two ways. If you finish confidentiality and you have written what you have to written, you can add the possible solution to this can be reporting. I mean, seeking advice. Do you understand? You can add it to everything that you have written. Or you can finish. I don't know if you are getting my point.
Okay.
So after you have done objectivity, you know that the guy was unduly influenced. That is why, and you pick the thing in your case, all right? And you said that this this can compromise the accountant's objectivity. You have concluded. You can add a line and say the possible solution is that the accountant should be firm or seek advice. Like you can add it. Or you can choose not to add it. Then after you have dealt with objectivity, integrity, and everything, you come and write possible solutions. You don't need to link it one by one to, oh, for objectivity, I will do this. For confidentiality, I will do this. You can just write them. Please, is that okay? I don't know if you get my point. Let me know if I've communicated sense.
It's clear.
It's
Yes,
clear.
sir.
All right.
It's clear, sir.
Okay, thank you very much. All right, so we now go to the next issue of sustainability. And this thing is just like a 5-7 mark thing in your exam. It will gradually find its way into the exam. It's just not now. Very soon, accounting is no longer an art. Accounting is now a social science. So very soon, we will stop all this debit and credit. Machines will be doing them. And therefore, we will be reporting on behaviors very soon. That time will come very soon. All this IAS 32, you do this, IFRS this, you do this, you do this. Very soon, machines will be doing all of them. Our job, therefore, will be how we report on the people doing it, the behavior. And so research, those of us in accounting research is not about how somebody is doing a debit and credit, but it's about the person, the behavior of the person, because the word accounting comes from accountability. And so therefore you need to be accountable, and human beings are the ones that are accountable. So that is where we are gearing towards, behavioral accounting. And so we use this opportunity to deal with sustainability. In 30 minutes, I'm going to try and summarize how all these sustainability things work. Then we will use the knowledge that we have, just like we have done, to help deal with sustainability issues. The concept of sustainability is not today's concept. In fact, yesterday when I was teaching this thing in term, I told people that when we were, and I think, was it on one of the days to online, we made mention of that. When we were in junior high school, I don't know where you were then, but they told us something about ozone layer. And the way we were mentioning it back in the days in Kumasi, ozone layer. So we've heard of these things, and the ozone layer is depleting, and that's why the sun is scorching us and everything, and all those things. All those things were the days of sustainability. It's not today's time. And for me personally, I wrote my ICA in the 2015 syllabus. So I started ICA in 2015. And in that time, we were doing sustainability. So when I hear students making this whole sustainability a fast, like it's sustainability, all those things, you are creating fear and panic to yourself. It's nothing. It's something you already know. You just have to shape it inside your exam. That's all. So I'm going to give you the journey towards where we have come to sustainability. And that's how your exams is going to be based on anyway. So the sustainability aspect, it's all about three things. And sometimes you can add the third one, but the third one is most of the time shifted to other stuff. But that is why in your exams, like the table that I showed you, they quoted it there. So we are going to really discuss, like, let me make it 4 things and conclude it with the lens of sustainability. So it started with environmental reporting. So we are going to talk about environment. And it brought in social issues. And we now moved to governance issues. And so you see, your exams, case study is more of governance. I don't know if you have seen the case. You see that there is more of governance issue already existing. All right. And then we ended up with all these things in sustainability. In sustainability. Now, so after dealing with all these sustainability, we in those times in the 2015 period, we umbrellized this thing and called this whole concept integrated reporting. So that is what we called it, integrated reporting. A reporting where after your financial statement, you bring in these things. And we even have, so this one, this 3 is called ESG reporting. If you are in the old days, you will know about ESG reporting. This is what we talked about, ESG reporting. We also had C reporting. C reporting. The only thing is that I'm going to explain to you, this you already know is environmental, social, and governance. But we have C, where we called it social, economic, then environment. So that is that. Social, economic, environment. All right. So the economic one is the one we have been doing, preparing financial statements. So now the social one is there, the environmental one is there. Then we've added governance. Together, we make them a sustainability. Then again, integrated reporting. So what was environmental reporting all about? Now, environmental reporting was about the fact that if you are an entity, when you prepare your financial statement, please disclose to us the impact of the company's operations on the natural environment. That is what it was about. So it requested that entities disclose the impact of their operations on the natural environment. That is what it was all about. So tell us how, and every company is supposed to, and I'll come to why it has come to sustainability. The difference between the ESG thing that we were doing and the sustainability you have now is that now it is compulsory. Before, it wasn't. Before, you just want to do it and you will do it and it will increase the image of your company. But now, there is an IFRS standard to it. So it means if you don't do it, your financial statement is not true and fair. I hope you, I don't know if you get the idea. That is what they have done now. Now it's a standard. So if you don't do it, then technically your financial statement is materially misstated. And therefore an auditor can say it is wrong. So this thing has come to increase the cost of people pay, how much people pay for audit. And it has also created employment, honestly, which means that in your company, it shouldn't just be an accountant. You should get somebody who knows about the environment. And if you don't want to employ, then it means you have to send your accountant on training. I think by now, most of you are accountants in offices. You have gone for training at Deloitte or KPMG or PwC on these things already, because you need to prepare a financial statement, and these things must be part. So the idea about environmental reporting was that you are going to disclose the impact of your operations on the environment. And here we are looking at the fact that you do certain things definitely against the environment. Whether you like it or not, you pollute the environment one way or the other. So this thing, of course, we are talking in reference of public entities. How do you use energy, especially manufacturing companies? The smoke, you are polluting the environment. How do you use your energy? In fact, I think some of us are daddies and parents, and my father was one of such people that if, as at now, it is 9 o'clock and your electricity is on, the way you will get it, that you are not conserving energy, and you don't pay light bill. The way he will give it to you, you will learn sense. Yeah. So all these things, the impact of what we do on the environment is what the environmental reporting is about. But notably, the whole issue was that when you are reporting this thing, you are going to report it in an annual report. So you used to normally see this thing in an annual report or other reporting channels, which wasn't the financial statement. You'll be using annual report and other reporting channels. And so that is why you've been seeing chairman statements and all those things. Sometimes they talk about these things. You were using the annual report, or sometimes if you want to use the radio to communicate to us what you are doing, then fine. But the thing is that it was a separate channel from the financial statement. That is the thing. That is it. Even though you are, and right, like for example, I belong to the Church of Pentecost, that's where I worship. Now, we have something we do that is tree planting activity. I think every May, June, July area, so that as it is coming to rain, the rain will build up the plant. But we don't report these things in the financial statement of the church. We don't do that. You really do that as part of the chairman's statement. So Chairman Nyameche will give an annual statement, and at the annual general conference meeting, it is there. And that is how entities have been doing it. So you read it. In audit, it is called other information paragraph. So this is what happened. So the channel for communicating this thing was other channels, not really inside the financial statement. And when you are reporting it, the content of what you are reporting, the content, what goes into the environmental reporting in the other channels was one, the environmental issues themselves. The environmental issues. So we are talking about you, the company. What is your policy about the environmental issues? What is your risk management process? How do you help solve or manage the risk in terms of this? What are the legal infringements and what initiative? So I can go on, but the main idea is the fact that you are reporting on the environmental issues and your initiative to deal with it. Now watch this. I gave you this example. You see, in an office, I consult for offices. Sometimes when I go to somebody's office, they have Vortic water, plenty inside it. So please, this is academic issue. I'm not saying Vortic is wrong. You need to drink Vortic. It's very clean water. But let's say everybody is drinking Vortic in the office. You see that the Vortic can, the plastic will be plenty. After that, we need to dispose. And when you are disposing, you pay for the rubbish you are making. Even though if you do it well, you can rather be paid for it. And that is what we are trying to learn. If you use the Vortic water and you dump it anyhow, so what is your policy? If it is dumping it anyhow, you will incur additional cost for refuse. But if you do it well, you will rather be paid because you get some people who come and buy the plastics. So what is your policy? What is your management process? What do you do? On the other hand, you can say that it's an office, so the dispensing water we will buy. Everybody come with your own cup, like that nice marks that people are using these days. You know, when you chat, ICA even gives you one. These days they give one. And most of the offices, the multinationals too, they brand themselves with one and everything. So you realize that you are getting it from your offices. That is what is happening. So you are getting it from your offices. Other than per se you going to use the plastics and all those things. No, you don't go there. No, you don't go there. All right. So this is what you communicate. But apart from this, apart from the environmental issues and how you link your activities and your policies to the issues, you are also supposed to tell us the financial information about it. Financial information. You are also supposed to tell us. Now, you and I know that you have done IAS 16. You know PPE. There are some of these things that come into PPE. We capitalize environmental expenditure, if you guys remember. In PPE, the initial measurement, there is one line that is environmentally suited. It comes through environmental expenditure. Which one is that? Who remembers? PPE, initial measurement.
Dismantling cost.
Present value of future dismantling.
Exactly. So the present value of future dismantling cost is environmentally based. So a question can come that what is the relationship between all these sustainability things that you are doing on your financial accounting? Is these same ideologies. So because of that, we are trying, the standard that has come has impact in all these things that you learn, the IAS standard that you have been learning. Okay, so the financial one is saying that detail for us how much you are spending on these things. You know, not only on this environmental, you know, this PV that you do is affecting IAS 16, but there is another standard that is affecting it. Just this one that you are doing. What other standard is that?
Provisions.
Provision. So you realize that it is also affecting IAS 37. So technically, you are reporting on your environment. Aside that, some people like EPA will come to you, collect a periodic payment, the refuse that you are also disposing, and all those things. You will be incurring some recurring expenditures. So you will see that financially, the content of what you are telling us includes how much you are also spending on that. So there is a whole standard on it. Now, this is the environmental reporting. Ladies and gentlemen, the whole idea is that at the end of the day, when we were doing this, we were not reporting it inside the financial statement. It was communicated through separate channels of the financial statement. Basically, that is that. Now, so that is the environment. We go to the social. The social. And the social is where we now realize that in the definition of accounting, as I learned it in senior high school. By the time I go to university and when I started my master's, I realized that that is why people even do MPhil, because I was wondering, what research at all can you do in accounting? What research? Then we realized that accounting is not as we see it. It's not just your ability to prepare financial statements. So you can have a professor in in accounting who may not even be able to prepare financial statements as you guys are learning. It's possible. It's possible. Because accounting is not just about the debit and credit. The word accounting means you are rendering accounts, like you are giving account. So I saw a research in mining, agriculture, all of these things are in accounting journals. I'm like, I thought we are coming to learn how IAS 19 impacts this, how it impacts this, how it impacts this, but that wasn't it. That wasn't it. So accounting has now become a social science. So in the social one, what are we doing? So accounting is a science. It is an art and a science. So when I was in SS, we defined it as the art of, you remember those 8 things that we used to keep in our head. Those of you who have done accounting information system, all those recording, summarizing, blah, 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 communicating, and all those things. We still teach that thing. I still teach it even now, level 200, basic accounting. Yeah, it is the process of. Yes. So we learn the accounting process. But now accounting is an art and also a science. So in social reporting, what you are basically doing is that you are reporting to us both your financials and non-financials. All right. So that is that. So how these financials, the financials that you have in here, they cater for only the shareholder because you are communicating value. Maximization of shareholders' worth. That's how we call it. So that is what it is communicating. But how do you deal with your employees? As an entity, how do you deal with your workers? How do you deal with your managers or board of directors? How do you deal with the society? How do you deal with GRA? So we need to know that. You see, it is out of this thing that we have IAS 24. The IAS 24 is telling us this one, related party. And that is why the salaries of these people are made public, because you need to disclose social reporting. You need to disclose. Do you know that in the laws of Ghana, if you spend any money you spent on directors are supposed to be disclosed? So like the chief executive officer, who is a managing director, like GRA boss, his salary is disclosed. Bank of Ghana man, his salary is disclosed. These people in high places, GMPC CEO, all those people, their salaries are disclosed. If they go to training, which of course they always want to go to the training in abroad, the money that is spent is supposed to be disclosed. And that is how politicians can chance on it and make a whole lot of arguments around it. That is that. So you have to report not only on your financials, but also, your activities with the society, how you deal with the society beyond your shareholders. All right, that is that. So here, the internal parties and the external parties, internal like your managers, your employees, external like the society, GRA, you need to really show us that. And so here is the reason why you have to show. So the issues here are that you have to be accountable. So we are talking about accountability, the concept of the accountability. And the focus here is also not only in the interest of the shareholders, but also in these people. So accountability to these people. And we also talk about the fact that you remember this thing, CSR, corporate social responsibility. Do you remember? So that is the thing, that is social reporting. So what have you done to the society? What givings are you giving to the society? How responsible are you to the society? All right. So these days, it is expected that if a company is established in a society, they help develop the society. If you come to Tema, where I live is Community 21. Now, when you are coming home, you can pass through a place called Ashaman. Is it Tulaku or something? I've forgotten the name. It is at a place, the overhead between how you can cross from Ashaman to Tema. All right. And there is a China mall under there. The Chinese people have built a mall there. Now, these Chinese people are developing the place. They have built the mall. The gutters has well been laid. They are constructing the roads that leads to the mall. So you see, they are developing the place. And very soon, their development has created opportunity for people to come and build nice buildings now around the area. And very soon, you hear of Ashaman being degraded. Very soon, very soon. It will get, in no matter of time, it is coming gradually. Because the muddy areas are now even developed. People are even building. They've already built a mosque already. So they are building. Gradually, it is coming into the system. All these things are the social responsibilities that we are talking about. And not only that, do you know that as an entity, your HR department, that thing you do, staff day out, and all those things, they are part of the social activities that you are doing. They are part of the social activities that you are doing. So you do all these things, you let an independent reviewer review it. So we need to get a comprehensive report by an independent reviewer. There has to be a comprehensive report on that. And you see, I used to work in a company where the fanfare is plenty. The fanfare is plenty. Like Henry, where I directed you to go for that interview. The fanfare is plenty. You saw that the fanfare is plenty from your interview, right?
Yes, sir.
Exactly. Right from your interview day, you realize that the fanfare is plenty. And so what they believe in is that there's a social aspect of the work. And you realize that they say you don't come to the office, it's not all about accounting, everything accountant. There's a social aspect of the work. So you go there, they want to have, every weekend there is this fanfare. Sometimes you can travel to, the whole staff will travel to Tanzania, fanfare. Another time, Nigeria, fanfare. Every time, fanfare. Every year you go to Nigeria, fanfare. So those activities are in there. And it is all about social reporting. Ladies and gentlemen, once again, then this reporting was not inside the financial statement. It was about a separate channel. A separate channel. Or inside the annual report. Then we now came to governance. So the ESG, we had governance. But I'm not going to spend more time on governance. No, really. I'm not going to spend more time here on governance because in governance, you learn that thing a lot through the other areas where we talk about board structure, the board structure, and the segregation of duties, then committees, audit committee, remuneration committees. All right. So the board leadership and structure, composition of so board leadership. We first talk about leadership. That it is the board that should give the long-term vision, the core values, the mission statement, the value statement. All those things are because of the board. So board leadership, that is number one. Then the structure of the board, the composition of non-executive directors and executive directors, and segregation of duty or board division and segregation of duty. So where the CEO should not be the same as the chairman of the board. You also talk about the committees, board evaluation. So you say we have board evaluation every year. The board must be evaluated and reshuffled. In Ghana, we don't do much of this reshuffling, but board must be reshuffled. That kind of thing. All right. Then it should be a blend of females and males, young and old. You should have remuneration committee who determines remunerations and all these things. All right. These are issues, all right, of more of the audit aspect and the other aspect of your course. But anyway, I've made mention of them. So you can actually talk about some of them. Now, this ESG reporting, all this one too was reported in a separate channel. There is no financial statement that you will pick that will have this. No. But you will find these things in the annual report of a company. That is it. Then we now come to the main issue. So these things are now combined and we now are looking at them and calling them sustainability. Sustainability. So what is sustainability? Sustainability is just a report on your ESG, your environment, your social, and governance. So how do you practice them? So the practice of ESG, all right, so that is what sustainability is about, the practice of your ESG, and therefore disclosing your performance and your impact on that practice. That is all. So you have been doing the ESG. How have you been performing? Have you done it well? And how is the impact of what you are doing? So here, we want to measure in sustainability. We want to measure. So which means that there has to be some KPIs that needs to be developed. We want to measure what you have been doing. We want to understand it and communicate it. So now the communication aspect of it has now come into a form of a standard, which is called IFRS S1, Sustainability Reporting 1. So now, this ESG that we have talked about, now it is a requirement according to IFRS S1, which is called the general IFRS S1 is about general disclosure, all right, of issues of sustainability. General disclosure is general disclosure. So it's a general requirement for the disclosure of sustainability related financial information. So that is what IFRS 1 is about. So you see, it is these ESG things we spoke about that now we want you to communicate it in your IFRS 1. So we don't want you to tell us only about your economics, because your economics is your financial statement. You all can see. But what about the environment? What about the social? What about the governance? Disclose to us how you have been performing and the impact of this. Now, we know that when these things come, we won't get people to do it. I mean, people will be reluctant to do it. Like I'm saying, these things will cost money and people will be reluctant to do it. And because people will be reluctant to do it, there has been forces that has been tasked to ensure that people are doing it. And so we are going to look at about 4 of them, those who have been charged to make sure. And it is not like they are forcing you, they are actually giving education. Even ICA has been giving money to help with education. So ICA is going through offices to educate people. And sometimes, instead of doing that, they will do annual conference. The thing that they go and have the fanfare. You go to Koforidia this time now, you go here, and they will have a workshop on sustainability. In the lens that, as you, the member, you have come for that meeting, you need to be able to go to your office and implement it. So they organize that training session for this. Unfortunately, me as a member of ICAG, I've never gone for that thing before, because all the companies that I've worked with, if I'm leaving office 1 week, it's a problem. It's a problem. And so leaving to enjoy yourself 1 week with the accounting, chartered accountancy has always been a problem. And it is also, they pay money. I mean, I think they pay around 5,000 or so. Sometimes it's 2,500 to like 4,000 something when you register. And your firm is not willing to do that. And those days when I started work, that 4,000 money was my salary. And using that one alone to go for that fanfare is another thing. Now I've left the corporate environment. I'm a teacher. So that one, I won't even go. Unless you sponsor me, that one day I will go. But a teacher, I won't even go. But please don't call me sell. That thing you people have been doing on campus, please stop that.
Yes.
And outside campus, anybody see you say on those things. My name is Thomas. All right. That's just by the way. So the task force people have been using, the International Accounting Standard Board and the IFAC and all those international people have been using. The first one that we want to discuss is what we call the Task Force on Climate-Related Financial Disclosures. The task force. So if you check your syllabus, it's one of the things they mention on climate-related financial disclosures.
What are we listing?
You said, come again?
The task force, what is the subtopic on that?
Oh, it's just the organizations who are enforcing the IFRS S1. those people who are enforcing sustainability reporting, making sure that it is done. We will come down, it will even come to our own ICA. All right. So this, in short, we call them the TCFD, Task Force on Climate Related Financial Disclosures. That's their name. That's their, acronym. Now, this task force are providing some form of framework and some form of education about the sustainability, and therefore they use the 4 pillars. Now, this is what is inside IFRS S1. They are educating people on IFRS S1, the 4 pillars on IFRS S1. The 4 pillars of IFRS S1, and please, this can be an examinable question. The 4 pillars of IFRS S1 is number 1, governance. IFRS 1 says you should communicate to us governance. What do we mean by governance? We are talking, governance simply means steering, how you are directing something. All right, like you are governing your car steer means that how you are controlling your car. So governance here is talking about, we all know sustainability has come. So as an entity, what are the processes you have put in place? What are the control systems that you have put in place? What are your procedures that you have put in place to make sure that people manage sustainability? So do you remember when I said the disposable plastics and all those things? So what are you doing to manage the sustainability in terms of its risk and the opportunities? I told you that you can actually earn money as an entity from using the Vortic waters. So what is your idea? When we talk of governance, we are talking about board leadership, like leadership. What is leadership mentality about this whole concept? How are they discerning the risk and the opportunities? And so in terms of the risk, what is the effect? Or how do they discern it? What is their understanding about it? And how that these things, their understanding about it, how they feel they will manage the thing, affect the value chain? All right. So over time, what do they do? All right. In fact, sincerely speaking, we can buy the Vortic water to appease our staff and use the security people to manage the refuse of the Vortic and let them get money from it. It can help them boost their morale. Number 2, we want to know your risk management procedures. So what is your processes? What are you using to manage the risks that are associated with the sustainability issues? If you are a company, all you know is that you are producing cement, you are producing biscuits, you are producing this, and all we hear or we see is the smoke, that fume that is going into the atmosphere. What are you doing to manage that? I don't know how many of you use the motorway, but the motorway, when you pass on the motorway, you get to a place where it is very smelling. Yeah, very, very, like it's bad. You get, and when you pass that place and you come forward a little, where the people are doing the peck biscuit and their place, when you get there, you feel like you want to roll down your glass and smell in the biscuit smell. That is it. But as an entity, what is your risk management procedure? Now, this reminded me of when we were learning advanced financial management in those days in the 2015 syllabus. There was the 13th strategy, and as part of the strategy, there was this thing we learned called carbon trading, that the UN nations go together in a meeting and they have allocated for each of the countries how much they can pollute the air with, how much you can pollute the environment with. So every country has the limit of their pollution, which means that statistically they will be coming around every nation. They are monitoring. So in Ghana, it's just that Africa data is bad. So we had the lowest share. We are not able to account for it. So we had the lowest share. But even with our lowest share, in carbon trading, we learned that countries that are huge in manufacturing can come and buy our space for pollution and give us money, so that they will be producing and we will be importing them. So they buy our carbon space too, and we collect money. So please, not all the time that you hear that a foreign country has given Ghana money is a good news. Oh, like the grant. You and I know, according to IFRS 20, that there are conditions to be fulfilled before you can even recognize the grant. So it is not all the time good news. No. So as part of the strategy, we want to know what you have put in place, your resilience strategy that you are going to use to manage the whole concept, to manage the whole effect of the pollution that you are going to give onto the society. So what strategy are you going to use to handle the effect? Are you going to spend money? So that is why people do corporate social responsibility. So they are polluting it and therefore giving you money to help solve the situation. Now, how do the task force get to know what people are doing? So therefore, they come out with some metrics, some targets, KPIs, we mean, to measure all these things. So the development of the KPI. So the task force are going around and they are educating people, giving them how they can measure all these things. So the task force runs their framework. So the first thing that they do is the framework for disclosure. So all these 4 things that I've mentioned is the first activity of the task force. We call it the framework for disclosure. So if you are disclosing under IFRS S1, these are the 4 pillars of the disclosure. So disclose, the framework for disclosure. Tell us. So it's like how you write your report, your governance, your risk management process, the strategy, and the KPIs, and how you are meeting the KPIs. Now, apart from the framework has these 4. Apart from the framework, the task force are also saying that there must be a check on the financial impact. So you had a strategy, you are dealing with it. Maybe yours is financially. So what is the financial impact of these things? So you have to disclose the financial impact on the organization, the financial impact, how you are dealing with the sustainability. You have to disclose it inside your financial statement, how it affects your cash flows. So how much are you spending on over there? All right. So that is that. So basically, this is what the task force is doing. There are about 5 things they do. I can add to you what we call the risk management and strategy integration. So this is your risk management, this is your strategy. We'll bring them together. But all these things, what you need to know is the overlook of all these things, or the general overview of this thing. So you need to integrate these 2 things. You realize that when I was talking about this, it looks as if they sound the same. So bringing them together. They even talk about scenario analysis. So if this thing is going to happen, like let's say if carbon, you are going to let me give you an example. Scenario analysis. Henry, I'm coming in. Monte Carlo simulation, those things we used to do. If I'm going to pollute the CO2, what would I then do? What am I going to give in place? If I do this, what will I do? If you do this, what will you do? Scenario analysis. All right, prospective scenario analysis. So let's say next year we feel like we are going to increase our manufacturing, and that will cause, the fume that will come into the air will be high. And so these are what we are doing. We are using new machines so that the fumes will be reduced, or we are going to spend this sort of money to help people to do the climate study and all those things. So those are the things. Yes, Henry, you can now ask your question.
Yeah, it's not a question, but this is more or less like corporate sustainability, and I'm trying to find out if we have to learn all this to write the exam.
No, you see, you don't need to really learn these things. You need to have an idea about what is happening. So if you are listening carefully and you are jotting some things, that you don't need to do ditto quotations. Do you understand?
Yes, sir.
Yes, you just need to understand that The enforcement is done by a task force. So any little knowledge you have under the task force, how they do it, you just write. Then after the task force, for example, our research these days has been through the GRI, the Global Reporting Initiative. Because even the task force, they even make sure that you are consistent with what you are doing. You adapt the IFRS one and you are consistent with it. And there is a Global Reporting Initiative. This one, I think you might have heard of it before. Now, Global Reporting Initiative is a reporting framework that you have to comply by. If you don't comply, in some countries, you won't get stock listing. Like Ghana, here we have our stock exchange market. In Ghana, GRI is not compulsory. And so, but in South Africa, it's compulsory. In most of the countries that are being, you see them develop, it's compulsory. The GRI is basically saying that, please, ESG is compulsory. You remember that I said that before sustainability S1, GRI made these things compulsory, that if you don't do environmental, social governance reporting, you cannot be listed. You can't be listed. Because, you know, they are interested in climate. They are interested in human rights. The social talks about human rights too. They are interested in your governance structure. So all the GRI countries are saying that compulsorily you have to report on your ESG. If you don't, then it means that you are not going to be listed. Thank God, in 2021, sustainability reporting started becoming an issue. So they developed, and its implementation just started in this year, but it has been developed. Yes. So therefore, what happens is that there is a combination now between the ESG, the GRI, what the GRI wants people to do, and what sustainability IFRS S1 wants to also let people to do. So basically, this is it. This is it. And so that is it. So they have come together. Again, we also had the IASB. What do they call that? No, it's called ISSB. Yes, that was their name. That's their name. ISSB, the International Sustainability Standard Board. They are established by the IFRS Foundation to come up with a sustainability standard. That's why they are the ones who brought in the IFRS S1, IFRS S2. These are the people who brought them. We even have, what do we call it? The Sustainability Accounting Standard Board. They are also there. Sustainability Accounting Standard Board. So how you are going to do the recordings of these things in your financial statement and all those things. Yeah, they do that. Determining materiality for like audit. How will you measure materiality in terms of the sustainability? All right. So basically, that is what they are doing. All right. Then we have ICAG. ICAG is doing a communication or education on sustainability just to enhance its implementation. Now, ladies and gentlemen, after all these things, what is the importance of this? Why do you, and that is the exam question. These are the exam questions, the general ones. What is the relevance of these sustainability reporting? Reporting on your environment, reporting on your governance, reporting on your social aspect. What is the relevance? What is the importance? Yes, any idea? What is the importance? Because after this, we look at the last thing of integrated reporting. Yes.
It serves as means by which a firm communicates its practices and how it influences economic activities and also affects social life.
Exactly. So they are basically, it is a channel for accountability. So you are telling us what you are doing, how you are accountable to our society. At the same time, you are disclosing it, giving us transparency. That is it. That is it. You are showing us how you are managing it, the risk management. So it is helping a company to identify the thing, the pollution they are doing, and at the same time developing means to manage it for us. And for a shareholder, this thing enhances your economic decision. Because if a company is, will you invest in a galamsey entity? Will you invest in a galamsey entity?
Yeah.
No.
Exactly. Why not? Because if you do, it means you are an illegal person. Because they are this, even if it is not illegal, but let's say the galamsey is not illegal, but we know that it is destroying our waters. If you invest in society, you see, ethics is in human beings, or people get conscience. Or God gave it to every human being. We will start fighting against you one day. It's just a matter of time. And we won't buy your products. In Ghana, Africa is kind of defying knowledge, sincerely speaking. Elsewhere, nobody will buy your thing. Oh. Yes, you say you have mined gold. You have done galamsey to mine gold. Unless it is smuggling, nobody will buy you. So you realize that you have to stop because nobody is buying. These days, I've heard that, and I think I read it also on a report, that if you go to the bank to deposit dollar, you must show the source of the dollar. Without the receipt, the bank will accept it. It's true, right? These days, that is where we are now. Bank of Ghana has done something like that. So somebody dash you, let's say, some dollars. You are going to put it in your bank account. They will ask you, where is the receipt? Where is the receipt? Yes. So like somebody is saying, black diamond as it is in Sierra Leone. Yes. So you find a way to, now if you have the dollar and you are going to deposit it and you can't get receipt, it means that you can't deposit it. Meaning that you have to deal with the dollar in your black market corner. That is how you can deal with the dollar. You can't put it inside the bank to make a legal transaction. Yes. So it means that they are forcing everybody to deal with bank and the forest bureaus and woe betides you if you get your receipt lost. That is it. So basically, gradually, that's how it's going to be. And it is also help us to measure our regulatory compliance. So how are people complying? So we integrate that in compliance now. All right. That is that. And stakeholder engagement. It is bringing about stakeholder engagement. You see, now it is not only about accountant, even the farmer is involved. All right. So basically, there are advantages. And so you see, Henry, these advantages, you don't need book for it. You just need to understand the essence of the whole sustainability thing and give your report. All right. So, ladies and gentlemen, with this, what I can conclude for you is that there is therefore IFRS S1. There is a difference between IFRS S1 and S2. IFRS S1 is a general concept. It talks about the general requirement for disclosing sustainability related information, like the 4 pillars. So it requires you to disclose your material sustainability related activities and all those things using the 4 pillars. Then IFRS S2 is solely about climate related requirements or climate related disclosures. So this is where we go back to our senior high school education and talk about the ozone layer. Ozone layer. So they told us that there is a net covering something in the space. And the more we bend the things, the net is burning. And very soon the sun will kill everybody on the surface of the earth. So there are general disclosures you are doing. But when it comes to IFRS S2, that one, it is between you and the climate. It is purely about the climate. So what is climate? When we say climate, what does climate mean? So tell us what you are doing and your metrics to measure your industry-based your metrics to measure all the things that you are doing. All right. So basically, that is that. So that is it. But any idea when we say climate, what does climate mean? What does climate mean? You know, the IFRS S1 involved is ESG. It involves your employees and all those things. But this one is solely on climate. So what is climate?
Climate
Yes,
is a you can say it's a long-term pattern of a weather condition.
yeah. So basically, that is that. It's all about the weather condition. And it can be influenced by you cutting down your trees and all those things. All right. But everything is about the climate. All right. So basically, that is that. Okay. So let's conclude this thing with integrated reporting. So you realize that your exam question will be state this, explain, discuss this, and all those things. So you don't really have what you need is your general understanding to write something for your 5 marks, all right, or your 7 marks. So let's conclude with what we call integrated reporting. It's also part of what they brought in there as part of the sustainability discussion. So integrated reporting is basically reporting on your sustainability and also your financial statement. Now, I've already said that integrated reporting now herein has become equated to the sustainability because now the sustainability is compulsory. So integrated reporting simply is about you have to communicate. So you are communicating. So it's a concise communication, specific communication about how an entity creates value. How an entity creates value via their ESG. So we are looking at their strategy here. We are looking at their governance, performance, and prospect. These are the 4 facets of integrated reporting. So what is your strategy? And here, the strategy, we are going to talk about the business models. So when you look at what you want to discuss, what you want to do, here we are talking about your capitals. So the governance we know is your processes, and your processes involve what you have to do, what you need to do. Okay, so we are talking about how your strategy, your governance, your performance, and your prospect all come together to create value, both short-term and long-term. So that is basically what sustainability is. So your strategy, what is your business model? And please, this thing is something you've learned in public sector. Do you remember these 4 things we used to learn? What we call inputs, activities, outputs, and outcomes. Do you remember them?
Yes, sir.
Yeah. Input is your raw material, what you put in. So your employees, your the natural resources,
Yes.
okay, the machines and everything. And the inputs are your capitals. So in terms of your capital, you know, we have human capital.
Yes, sir. So it's in a case study.
It is in case study too. What capital? Technology capital, financial capital, all the capitals. So that is it. So what are your inputs? The input you have, what do they do? Your processes. Some of the inputs are used to do processes like budgeting and all those things. So you do budgeting, you do planning, you design, you provide services and all those things. The output is your product and service, what you come out with. At the end of the day, what do you give to the society? Your product, your service. Then your outcome is what is outcome? Outcome is simply the consequence of your product. Is that not it?
Yeah. Yes, sir.
Yes, the consequences. So if you use your product these days, they say the yam that we are chopping, there is mercury inside it. Yes, it is a consequence. So these are the things. So, and you need to have a prospect we need to measure your performance. So these things you are doing has to be measured. So we need to measure your performance with KPIs. And we know you need to do better. So what is your business outlook? All together equal to value creation. So please, the exam question in this area can ask you about the business model. What are the business model of integrated reporting, the strategy? What is under it? And so it gives, and these are the last two major places that you need to take care of. It gives you the guidance of how to do your integrated reporting. There is a guidance on how to do integrated reporting. So the guidance on how to do integrated reporting is just what you see here. So what is your strategy? What is your strategy? So that is that. So let us know your strategy. Then what kind of information do you have to communicate to us? Your stakeholder relationship. So we've already talked about the social things, the relationship. So tell us the relationship. And please, here, let me tell you this. We said that the thing must be concise. And we also said that the thing must be potent enough to communicate everything, as we have already said. But here, if you are asked the governance, the guidance framework for integrated reporting, do you remember the conceptual framework that you learned in financial reporting? Conceptual framework, relevance and faithful representation. Do you remember?
Yes,
So
sir.
just say that the thing must be relevant. It must be concise, faithfully represented. It must speak the truth. Whatever you are reporting to us must speak the truth. Then you remember understandability, eh?
Yes, sir.
You remember what again?
Comparability.
Comparability. So here to you say that the thing must be consistent and it must be comparable. That's all.
Verifiability.
Verifiability. Yes.
Yeah.
Timeliness.
Timeliness. So these are the things you are doing. So verifiability here, we call it material. It must be materially verified. All right. So this is that. Consistency is part of comparability. So that is all you are saying. So don't forget those things. Because at the end of the day, they can ask you what are the content of an integrated report. What goes into the integrated report is the definition of the integrated report. What goes into it is this strategy. It's your governance. It's your performance. It's your prospect. So don't forget. Your future outlook, that's your prospect. Your performance, how you are doing. This business model, that is the content of an integrated report. Even your capitals. So 1, 2, 3, 4, 5, 6 is the content of your integrated reporting. Your future outlook, how you think the future will be. Your capitals, how you use it to manage your business process and your risk. So ladies and gentlemen, this is all you need to know about this whole thing about sustainability. Yes, it is not only sustainability. You know, there is technology as part of your course. But as for technology, everybody knows the purpose of technology is what? To make your work easier, to enhance transparency, reduce mistakes, and to foster accuracy. So that is technology. But so not only sustainability, they can ask you questions about how technology is helping things. But we know that technology speeds up processes. Is that not it? It erases the slow motions. Technology is transparent, brings transparency. Technology helps in having accuracy of information, so accuracy. Technology is more reliable these days, and it wasn't supposed to be so, but that is the problem we are facing. But in as much as, and it is very efficient, let's be sincere, technology makes you very efficient. But in as much as it does all these things, you can lose data. So data security, which is very expensive. Technology is expensive. You can lose data, you can be hacked. We don't really have, does Ghana have laws about technology, like internet, all those things? We lack standardization. We lack them. What is the name of the act of technology? We don't know. So ladies and gentlemen, these are the general things that you are supposed to know. And some of the questions we feel like you may face is the question you see in the things that has been given to you. And so I'm going to ask you the question from what you have heard. Let's see if you can give us something. So this lengthy statement is there. The recent at a recently concluded AGM meeting of a company, one of the shareholders remarked that historical financial statements are essential for corporate reporting, particularly compliance purposes. But it can be argued that they do not provide meaningful information. Now, you see what I was talking about. That is where it is gearing towards. Even though it is doing that, it doesn't really give meaningful information. After having issued a series of environmental and sustainability reports, it is apparent that although members were allowing a true and fair review of the company's financial performance, operations, and management. Oh, please, let's make sure this is the quorum, please. After they are doing all those things, he says that they were not necessarily relevant to stakeholders. So it looks as if everything is about financial. So here it says that the international integrated reporting, the IRRC, is calling for a shift thinking more to long term and to think beyond what can be measured quantitatively in quantitative terms, and to think about how the entity creates value. Anyway, with all these things we are doing, where did you hear about creating value? Everything that we have been doing, which aspect of it talks about creating value?
Process.
Yes, which subtopic talked about value creation?
I think the integrated reporting.
Exactly. So that is where you should start catching the fire from. So it now says that discuss the principle and the key components of the IRRC framework. What is the key components of the IRRC framework? That is exactly what we've been discussing under integrated reporting. The things that are under integrated reporting, that if you are reporting to us, we need to discuss your strategy, governance, and everything.
Yeah.
So that is but you see the way they frame their question.
Yeah.
Yes. So that is all you are doing. That is all you are doing. Integrated reporting advances proposition that sustainability reporting and financial reporting are inherently linked and thus will benefit from the merging. All right, that is a proposition made by Bob Massey, the co-founder of Global Reporting Initiative, that GRI people. Explain how integrated reporting measured with sustainability and financial reporting. You know, integrated reporting, we spoke about the fact that it is integrating the financial statement and the sustainability. So explain how they come together. And this thing, you don't need book, and there is no one answer to that. You don't really need book for that. So please, so who can share an idea? How do you think they are bringing things together? The sustainability reporting and the integrated reporting. Yes, any idea to be shared on that?
Hello, sir.
Yes, please.
So I would say that integrated reporting connects financial data with environment, social, and governance factors, which shows how sustainability initiatives impact financial results and vice versa.
Yeah, it does. And we even talked about the capitals under integrated reporting.
Yes, sir.
The capitals, and we made mention of the capitals being your ESG, social is part, so human is part, technology, yes, and all those things. Yes, Henry, your hand is up.
I want to first find out, you see the content of the integrated reporting, are they 6 or under the business, under the strategy, we have business model? Because I see.
Yeah, it's part. So the strategy is communicating your business model. So we have the what makes sustainability reporting a strategy, which is your business model, governance, your performance, which is the KPIs you need to set, and what you want to do in future to create value. So basically that is that. So the content of sustainability is really the strategy, the governance, the performance, the prospect. The prospect is the future outlook. All right. So, but
sorry. Finish. Sorry, you finish.
No, you can ask your question.
So said the connectivity here, for example, let's say if we decide to invest in eco-friendly operations, it may initially increase cost, but in the long term enhance profitability and brand value as well.
It's true.
So there's a connectivity between sustainability and integrated reporting.
Exactly. So as you are spending on it, it is financially affecting things also. Your cost is there. So this one too is like explain 3 factors which motivate companies to disclose their. So what are the relevance? So why would you want to disclose? Why would you want to disclose? Yes, any idea? Why do you think people would want to disclose issues of sustainability?
To show how the entity is committed to the environment.
Yeah, that is one fact of it.
Yeah, regulatory compliance.
Yes, regulatory compliance.
Transparency and accountability.
Yeah. Again, identify 4 specific difficulties in measuring the financial effect of environmental matters. I have something in the Dropbox to protect the public. Yeah, it's true. I mean, if you let us know what you are doing, at least we can even position ourselves. It says that identify 4 specific difficulties in recognizing and measuring the financial effect of environmental aspect. Now, one of them is what we discussed, the present value of future dismantling cost. The difficulty is that thing is an estimate. And in an estimate, what can you do? How can you have a KPI for an estimate? So one of the main difficulty is that it is an estimate. And again, another difficulty is that the time between there is a time lag between the time you put the thing in your financial statement and the actual time you actually do the spending. So there is a delay in the activities. Have you seen that? That is a very, yeah. Another thing you can also say is that you can also talk about the fact that the laws surrounding environment are ambiguous. There are no clear laws about. Do we have laws on sanitation here in Ghana? Because yesterday when I was coming from church, I bypassed a taxi driver who finished, a Uber driver, who finished drinking water in a sachet water, then threw it outside his window. And I became mad.
There are laws, but they are not enforceable.
Yeah, the various assemblies have bylaws governing disposal of waste, but it's not enforceable.
So those are some of the difficulties surrounding the whole issue. Sometimes people think it's not well communicated for people to even see. Yeah, as you say, the various assemblies, you see the various assemblies, they have it, but how do they even communicate of such thing? When I was young, we used to have
tankers.
Good. The tank. I mean, every Tuesday, you know that no, they are coming. Those people are coming. And so it caused us to, in fact, you can be dirty for the week, but on Tuesday you can't be dirty. And it got to a time they were not coming on specific days. And so every day you were on alert. So what happened to this Ghana at all? What happened? And you see, those people, when they came, those days when they come, they charge you money. But of course, compromising became the issue because those people who were in those town council were your church members. And we felt like them doing that thing is rather helping. it's very interesting how the black man defines morality. All right. And sometimes too, you know, because of the lack of porous laws, it becomes a voluntary thing. It becomes a voluntary thing. And so therefore, people use that as a liability can be legal and constructive, right?
Yes, sir.
When we say something is constructive, the fact that you are doing it every day, I told my student that assuming if I see that there is one particular lady you are always working with, I know that your landlord says that every morning you are leaving the room with her, you come together and everything. Nobody needs to tell me you are married or not. Me, I will assume that you are married. So basically, that is that. You see, and the integration tool, you remember what we talked about, IAS 16, IAS, what do we call it, 37, it all has financial impact. So this part, I mean, just have to go through and use the understanding of what we have done to answer the question. Most of the time, especially from the perspective of a shareholder or an investor, the relevance of the sustainability or some of the key elements of integrated reporting. So, ladies and gentlemen, this is all about the whole sustainability wahala that we've been. So it's nothing difficult. Have a general overview of that. But this is an intervention class to run you through over the things. And this is all you need to know. Any question at this point before I allow you to take your break? Any question?
So please, no question, but my data went off at the point where the relevance of sustainability.
But you ask yourself, why do you think it's relevant? Before you get the book, I mean, some of the things you mentioned, is it relevant? And if it is, come again. If it is, these are the reasons. Okay, these are the reasons. Have you seen them?
Yes, sir. Thank you, sir.
All right, so that is that. Okay, so guys, thank you. I know you. Yes, please.
Yeah, please. I want to. My line was but I want to screenshot the integrated report and the summary that you've done. So if you can open that one for me,
this one,
then I can screenshot the integrated report.
Is it okay?
Yes, please. Okay, thank you very much.
You know this football team? You know this football team? Do you know them?
Yes, sir.
Paris Saint-Germain.
Paris Saint-Germain.
All you need to do is to add another P to this. So P, Paris Saint-Germain, you remember this one.
Exactly. So that's what I just did.
And that's all. So that when
If
you
you're a
are asked to
football
talk
fan, you
about
understand.
integrated reporting, you can do that.
BPS.
Okay.
Prospects performance.
Okay. So if you don't remember anything at all, the men there, you can remember PSG. You just need to double the P.
So say, what about we the women?
Basketball, and handball, what do you do? I don't know.
Postpartum surgical.
When pregnancy, something, you can put something there.
Pregnant PSG.
All right. So, guys, this will be it for the sustainability and the ethic. So, the idea is that this thing is 15 marker.
Okay.
And you are ready for that. Please, everyone mark count and be bold. I think that, don't you feel within you that you have learned something that you can apply something in the exam room right now? I mean, what we've done so far.
Very, very.
And
Yes,
so
sir.
that is the same confidence you need to develop small. So, for example, God willing, tomorrow, and some of you, this is the only course left. So, I mean, come on, kill it one time.
Say, Charlie, the motivation you are giving us.
So it shall be.
Amen.
All right. So I'm giving you how many minutes do you need? Usually I give 30 minutes.
Say, come again. You said usually you give
1 hour, 30 minutes.
Okay.
So go, we will meet exactly like 12 o'clock, but it is before 12 o'clock. By 12 o'clock exactly, we are starting the class.
Sir, this one is now 10:20.
I know. 1:30, 1 hour, 30 minutes means what? 11 what? Let's say it's 10:30. It will be like 12 o'clock. Is that not?
Okay, sir.
So exactly 12 o'clock, I'm starting. I will not be waiting for people at 12 o'clock. I'm starting.
Okay, sir.
All right. Thank you.
Thank you.
Thank you, sir.